This is my very first video in the COT weekly series, and in this video I am going to show you how to use barchart.com to find daily bias on the forex pair. And my example I'm going to use is British pound US dollars. So this bias will form part of your trading plan and let you know the underlying force of the market, either bullish or bearish. So first, we're going to open barchart.com as I've opened it here, and you can choose from this commodity tab. Here is the futures contract of each of the commodities. But what I'm going to use, because I am selecting a forex pair, is to go to currencies and the currency tab here. And I'm going to pick the British pound. In the British pound, I'll scroll down till I see British pound against the US dollar. This is the various British pound forex quotes against various currencies. You can see an example here against the UAE dirham, against the Argentine peso, the Australian dollar, the Bahrain dinar, the Canadian dollar, the British pound against the French Swiss franc. But we're going to pick the British pound against the US dollar. Here we have various data on the British pound against the US dollar. You can see the current news revolving around this forex pair. This is the last commitment of traders position that was reported as of May 26, 2026. I'm going to click on the interactive chart. You can sign up if you want, so it's free. You can use it freely. For me, I can use it like this without signing up. Let's click on the full screen. So this is the interactive chart of the British pound against the US dollar. And on this chart, we have various drawing tools that we can use. We have the trend line, the ray, the horizontal line. Here we have the fib retracement, fib extension, fib fan, fib channel. We have the various shapes, arrow tools, numbers. Here we have the date range, price range, long and short position. First, let's change this to a candlestick chart. Now we have a candlestick chart. And what I'm going to focus on is to use the 6 months. Here, we can select the time frame we want to look at, either the 1 minute, the 5 minutes, the 10 minutes, the 15 minutes. I'm going to focus on the daily time frame because my plan is to get a daily bias for each day. And I'm going to use 6 months worth of data. Our focus to get the daily bias on the British pound US dollar is to use ICT hedging method. This method was to use the commitment of traders chart and find the 50% level between the highest point and the lowest point in the last 6 months or 12 months. But my decision is to use the last 6 months. And you can couple this strategy with other indicators and other trading strategy. So this should give you just an underlying bias of the market so that you know what is happening in the market. So where do we get this commitment of traders chart from? We go to the indicators tab. On the indicators tab, you can find it in the standalone studies. You have various studies here. We have the accumulation distribution channel, the average true range, the Bollinger Band. What I'm going to pick is the commitment of traders chart. You can also type it in COT and it will bring it out. Commitment of traders chart. You have the disaggregated version. You have the financial. You have the commitment of traders index. We are going to focus on the commitment of traders chart. Let me remove this grid. So this is the plot of the commercial. Okay. On the commitment of traders chart, once you open it, we have three styles. You have the commercial spec, the large trader spec, and the small trader spec. The commercial specs are the hedgers. It is them who want to know what they are doing, because they are the one that uses and produces. They are producers and they are the users. Then the large trader specs are big banks, are the fund managers. Then the small specs are other traders like us, public traders and the rest, that do not have enough capital to reach the large spec or the commercial specs. There are various ways of subdividing this, but this is not our main topic of the day. So we are going to select the commercial spec. It is this one we're going to work with. This that is marked red, we're going to work with it. So this is the plot of the commercial spec of the commitment of traders chart. And to use direct sitting hedging method, instead of going to paint to go and draw it, we'll use our fib tool, our retracement tool. We'll pick the highest point to the lowest point. Then we now select 50%, 0.5. That's 50% of the level between the highest point and the lowest point. I'll make it a bit darker so we can see it. And here now comes the secret sauce. So we are going to, where it changes from above the 50% to below the 50%, we'll mark it. Sometimes it goes below the 50% and comes back up. So we want to make sure that it goes below very well. Like the difference between here and here will be about 15% also. But we just use our eye gauge to gauge it. So it moves down below the 50% line, which means from on the 30th of December, we are looking for bearish signals. So we are bearish on this period, this time frame. And if you see, use the eye to look based on hindsight. Every push up is a selling opportunity. Every push up is a selling opportunity. Look at this amount of huge push up. People think like it has changed its bias to buy. And then what happened? A strong bearish move down, taking these lows. So taking this low into this point, this starting point of the bullish market, and reverses. And it reverses in time during what? When the commitment of traders chart has turned bullish. So you can see it works. So when it leaves below the 50% line and crosses to above it, it's market bias for British pound US dollars on the daily time frame is now bullish. You'll be looking for buy signals. And you can see every push down has a push up, every push down has a push up, every push down has a push up. So based on this strategy of using the commitment of traders chart, the commercial plot, we are bullish on the British pound US dollars. And this bias now will form part of your trading plan and let you know the underlying force of the market. Either the market is bearish, as you can see it here, or it's bullish here. Then you have to practice this every week, because the commitment of traders comes out on Friday. So you can use Saturday on Sunday to practice it on the pair you want to trade the following week. And always have it as a strong tool in your trading toolbox. Let's try to see if we can get a buy position. So it takes out a low, creates a high, but look, an engulfing, creates another engulfing here. We're going to pick the second engulfing. This is hindsight, by the way. This equal lows. This is going to be our target. Let me use trend line for that. Change it to blue. So we are profitable on this. Remember, it picks out this low. Picks out the low. We are profitable on this. Here's another engulfing. Use the low of this. Stop loss below this low the candle. Equal highs. So as you can see, I'm using this bias now to trade. Instead of seeing the market coming down and begin to catch bearish signals, I'm going to sell with the market. I'll wait for a time it runs into another block, gives me an engulfing or a fair value gap. As you can see, it trades from this fair value gap, and this is where it's doing its straight trace from. Let me pick the fair value gap so you can see it. No, wrong this time. I don't trade fair value gaps. I trade other blocks and engulfing. But you can use it, you can see that you can use it with fair value gap. You can use it with inverse fair value gap. Change this to light blue. So this is exactly how you use it for your daily trading. If you want to day trade, if you want to swing trade, you can use this. This is the basis of it. So please like and subscribe. If you find this video insightful, like and subscribe and watch out for our next video.